Yeah. So we've got a global macro sell coming in, which means sell the blue line, buy pounds. Now, if you look at the pound in the background, we just made a swing low on the pound. The carry trade was bullish, divergent. And obviously, we're selling the blue line at the top edge. You can see we buy pounds on the dip. We buy more pounds on the dip. We sell the blue line at that stage. So this provides us with a hedge outcome. If the blue line's right, the pound should make a lot of money. If the pound is right, the blue line should make a lot of money. And we adjust our positioning accordingly. We adjust our position accordingly in that narrative. And obviously, that's exactly how it's working out. You can see the blue line's now accelerated to the upside, and we'll do the trade again. But this time, we won't take any pounds in this trade. What we'll do is we'll just build and add to our position on this at the moment in terms of the S&P. So you can see that we are now going to add to our S&P trade there at the close of that candle there. And we're going to add to the FTSE position at the close of that candle there. And we're going to stay long the pound position. And that's obviously the idea behind what we're seeing at this point in that trade. So you can see that whilst that rallied, you might say, but surely you're losing money. No, because it's being covered by the long position on the pound. You're not losing any money. You're just covering your position on sterling at that stage. So obviously the idea is that this simply just closes the gap. The long position on sterling and the blue position short ends up meeting somewhere in the middle. As it always chops round, it always chops round. And as it meets somewhere in the middle, we'll either make a lot of money on sterling and no money on the blue line. We'll make a lot of money on the blue line and no money on sterling. Or we'll make a bit of money on the blue line and a bit of money on sterling. But it always rotates, it always chops round. We always get something out of these deals. And that's what we're in just now. And you can see, obviously, the storyline, the S&P is again making a lot of money. The FTSE is starting to roll off the bottom edge, which is nice. The pound is still making a gain. The blue line's dropping. That's exactly what we're looking for. And this is a nice outcome. Now, the challenge, what is the challenge? The challenge, of course, is this bad boy's coming to an end. So we've got to make the gain on it. We've got to be keen to take our profits as soon as the spread goes into profit. We've got to be keen to get that money off that trade. Otherwise, we're going to be trapped in this FTSE position. And obviously, that's obviously a bad situation to be in if we're trapped on any position, isn't it? So a global macro trade, GMF, global macro fund trade against the PF line. Very nice. I've got a little bond short as well, which is going to take us into the first classroom. Did anybody decide to sell some bonds off the 22s there? It's only trading 20s, but I was able to get a quick, easy stop at break even and grab a little bit of profit on the trade. It has dropped, by the way, to a low price at 19s. So you could certainly have got a stop at break even, worst case, on the deal. But you know, the overall view of it is there's certainly some buyers getting trapped up here. The book's going offered, and it looks like a reasonable proposition to work away from. So we're in the London fix, of course, the big